GetCrack. Wake up, motherfucker.
Yo, May 27th. What's up? All right, let's go. Let's get to it. Holy shit. What's going on? What the heck was that in the morning, huh? All right. Okay. So that's the chart. NASDAQ futures. NASDAQ futures. So pre-market, if you were watching pre-market, um, Micron was up like 5% at the beginning of pre-market, 4 to 5%. Then 1 hour before opening, it was up 9 to 10%. 9 to 10% Micron was up. And I was like, what the hell? Oh man, all those shorts are going to get blasted today. And then it just started dropping like a rock. We had an Olympic dive, man. We had an Olympic dive. So if you look at the NASDAQ futures, if you go from the very top all the way to the bottom when the market opened into 30 minutes. So 30 minutes after the market opened, we went all the way back down here. We moved 1.6% from top to bottom within 1.5 hours. All right, from pre-market to the market open. Now, if you just look at Micron in the morning, you'll be like, nothing happened. Nothing interesting really happened. What's that? What's this thing? What's this thing? What's this? How much is this? How much is this thing? Okay, 6%, whatever. I mean, this is a volatile stock. You know, it could have been worse. But then you miss out, like, dude, it was it was all the way up here. It was all the way up here, pre-market, bro. Somebody didn't want okay, look, the options market, all right, for most people, options market doesn't start until the market opens. Some places they allow you to have maybe 30 minutes before the market opens. Maybe you could do some trading with options. I don't know. Some places allow you to do that. Wait until we get 24-hour option, 0 day to expiration options market. If you got 24-hour 0 DTE markets, shoot, man, the gambling is going to get so intense. So intense. So, you know, let's look at where Michael Burry started shorting. Michael Burry probably started shorting around here, right? Somewhere around along here. He's way underwater. Martin and he started buying more, right? Puts on the way up. Martin Shkreli probably was around here, I guess. I don't know if he started adding, but he's already underwater, yeah, right? Unless he got out over here, I don't know. I mean, options market is a bit different. Options market doesn't really like, oh, it's based on price. No, it's based on price, volatility, the day to expire. I don't know what days they put to expire. Did they make a short here and what strike price too, right? So like there's a lot of all these little flows that are going around that's messing around with this stuff, right? You learned a little bit about delta. So now the delta is very strong. So that means like every percent up is probably like 20-30% on these options. And then you got the VOMA, gamma, and all that crap. Well, what is this? What? So it's going to get worse, guys. It's going to get a lot worse. And if these guys cannot push this thing back down into this range, right? Like, dude, bro, Micron is still floating up here. This is barely a scratch. This was nothing. Okay, so let's look at semiconductors. Let's look at the rest of semiconductors got punished a lot more here. You went up. You slam back down to the bottom of this area where we gapped up. This gap is going to be very important then. So semiconductors, this has to hold. This area has to hold. If this thing just slams all the way back down to this blue line, uh-oh, people might start panicking, man. So all it did was make a lot of the semiconductor stocks go down, right? So we saw Nvidia. Nvidia during the day it was like down what nearly 3%. Qualcomm's very punished a lot, which makes sense because Qualcomm. I don't even know if Qualcomm should be even up here at right since earnings. This thing. You see how hard it has at trying to hold this range even between 200 and 232. Watch the next time the semiconductors goes down. It's going to go right back to this blue line. And I don't know if people can take that. Marvell had earnings, nothing much though. No, not much of an effect. This guy, well, if tomorrow when we open this thing just floats down, oh boy, that's no good. Oh man. So yeah, as you can see, there's a lot of punishment here with the semiconductors. But Micron still floating up here, still floating, still going like, well, look at me. I'm still way far away from the range. Everybody else paid the price for it though. Everybody else paid the price. But Micron's still up here. Nvidia is like 8 to 9% of the S&P 500 market weight. So 8 to 9% influence on the market S&P, okay, Nvidia. So if you look at Nvidia, honestly, Nvidia has been doing terrible since before earnings already, and after earnings it's still floating down here. So Nvidia is not helping. Nvidia is not helping at all with the markets. I guess it's all up to Micron because I don't know if the other guys can pick up the slack. Really, it's just Micron right now. You kill Micron, you kill the whole market. Essentially, that's all it is. You got to destroy this guy. Intel, well, it's still in the range. If Intel starts flying, I suspect it could. That'll be trouble for the shorts. That will really help out the semiconductors go back up. So I know Michael Burry shorted Micron. They shorted the ETF here, SOXX, SMH. So yeah, these are the things you got to kill. You got to kill that sucker. In other news, look at oil. See, that's why I told you to stay away from this stuff, right? So we already made our money back here in February up until March, late March, right? And then look at what it's doing, just sideways, sideways, sideways. Boring, boring. I don't want to play this. Either you're just gonna go back up again later on, or just ignore it. So this market, you got to move around. You got to move around from things to things because, like I told you guys, to get into HUD and all that stuff. Look at HUD. Look at HUD. HUD's about to go up. It's already broken out. Core Z, I guess, is number 2. Maybe I should trade all my Core Z and turn it into leverage now. Maybe APLD too. Just turn them into leverage. All these guys are ready to go. They're ready to go. I don't know what's going to stop them, really. The only thing that's going to stop them is if Micron crashes and then the semiconductors really take a bigger beating tomorrow. Okay? If that happens, then that could affect everything. So yesterday, right, Tropes, you asked me the question, well, what influences what? Who influences whom? So does the stocks influence the actual index? And I said, like, well, that's what happened before all this options and futures and all this stuff influencing everything else. Now I don't know. Like, who started the thing going down? Was it Micron that did the damage? Was it the futures market? Was it the NASDAQ futures here? Was it this? Because like Micron is a big influencer now. Micron is $1 trillion company at this point. So did this influence Micron? Micron influenced this? Did this in turn influence the other stocks? Who influences whom? I don't know. This market doesn't work the way you think it should work, right? You think like, okay, the index only gets its value from the stocks underneath, the stocks that make up the S&P 500, 500 companies. You would think like the votes out of all the 500 companies should influence this. And you probably be wrong. No, 500 companies do not influence this anymore. And not only that, we have VIX. So the nerd who talked yesterday, right? So does the VIX, which is based on options of the index, implied volatility, does this thing influence the markets? This thing is supposed to be derived from the option prices of those 500 stocks. But guess what? I don't think it does that anymore. I think this thing, the futures market of the options market, influences the options market and therefore influences the index and therefore influences the individual stocks. So it's so convoluted that you can't tell who started what, who started the ball rolling today in this morning. So I have no clue. I can't help you. This is really going to get bad, really bad. Okay, Core Z has an upward wedge consolidating a tip, probably going to take off. Yeah, maybe. I don't know though. Tomorrow we'll have PCE data. We'll have inflation numbers at 5:30. Marvell, nothing much. The only stock that really took off after the close on earnings was Snow. So Snowflake is up 30% today after the close. So this thing right now, Snowflake. So let's look at the weekly. Snowflake is going to open up over here if it holds. If this thing holds in pre-market, it'll open up here at this level. Very important level. This thing IPO'd during COVID. Okay. And this had a problem trying to hold this range. It just goes up, goes down, goes up, goes down, goes up. Typical software stock with service, software as a service. You see, every earnings is like a binary event. I have no idea why anybody would think this is a good investment. Okay, because every time you hold earnings, you have to pray that it doesn't crash 30%. And then if you're lucky, it goes up 30%. Just like, let's look at what happened yesterday with Zscaler. Zscaler, it went down 20%. And then today it opened down 30%. So Zscaler failed. Snowflake survived. So these companies, I have no idea why you want to hold them in earnings. It's just a crapshoot. This is pure gambling. This has no trend. You see this? Why would you buy this? This has no trend. If there's no trend, I don't touch it for long term. Maybe it's fun to trade, but even then, it only is tradable during earnings. So you're basically gambling before earnings date, and then when earnings does something, it either goes up or goes down. 30%, 20 to 30%. And if you're doing options, yeah, you're having a great time in the casino, aren't you? You're trying to guess like, oh, maybe if I gamble on this stock, I'll make like 1,000% in a minute. Okay, good luck. And good luck with that. So yeah, I don't touch this stuff. Fuck this. This is crazy. But Snowflake, 30%, not bad. Not bad because we're back at the top and it had some news to go with it. They basically said, we are going to have a partnership with Amazon. So they got a partnership with Amazon, man. So who knows? Damn. But yeah, if you look at Zscaler, it's all the way back to where it was before Taco. So the first big taco with Trump, it just lost all of it. All of it's gone. Everything's gone. We're right back where we started. And you see this stock was already being punished way early in October with all the other software companies. Okay, so anyhow, there was other earnings like what was it? CRM. What the heck is CRM? I forgot. Salesforce had earnings, so not much after hours action there. We also have, oh man, HPQ. You know, I talked about that yesterday. HPQ, nothing much, nothing much with HPQ. Dell has earnings tomorrow after the close, but Dell announced some news today after the close. We got Pentagon contract. So the Pentagon has chosen Dell to do some work for them. And it's up 5 to 6% after hours. So this thing has been pumping since Trump said, buy Dell. So if you listen to Trump, buy Dell. You can't sue Trump for that because Trump told you that he was buying Dell and he told you guys to buy Dell, so he can't be sued for or put in jail for insider trading for that one. So there you go. So anyhow, okay. So the most important stocks that I wanted to talk to you guys about today were a few stocks I saw. App Lovin is up again. So it's been up pretty much all week, yesterday and today. So up 70% in total for the week. And we are above this important line of 518. 518. Pretty important. So is App Lovin ready to rock it up? We're done with earnings. Earnings was done already several weeks ago, and it looks like it's out of the range. It looks like App Lovin here, it's out of the range. If we don't puke in the markets in the coming 2 days, okay, because of what? I don't know, Micron being too high, the Koreans going crazy. There's some Korean news. Some Korean news today. I heard that the Koreans now they're being blocked from getting margin. The Koreans are going crazy. They're getting loans to buy stocks, and then the brokerage they said no more. We're not allowing you to get any more leverage. So the Koreans can't pump their bubbles anymore. So that might be a problem. If the Koreans can't pump, then it's going to be a hard time to pump Micron, right? Micron is a memory stock. The Koreans keep pumping their memory stocks, and every time they do it overnight, they pump our memory stocks during the day. And so if that's stopping, I wonder if that's going to be an issue, okay, with semiconductors. So we might have a problem with that. And the Chinese already stopped all the Hong Kong brokerages from allowing the Chinese to pump other foreign stock markets. So I wonder if Micron will actually finally just give up. Maybe it can't get to 1,000. My target is 1,000 to 1,200 right now. 1,000 to 1,200. I saw some people on Twitter saying they see some options bets. Some people on the options chain, some crazy people who bought a lot of options back here. Okay, they're targeting $2,000 a share with their options. They haven't sold yet. They're holding. So whoever bought down here, they're holding. They want to see $2,000 Micron, man. Dude, this market is perfect. This is a good practice run for you guys. You guys who missed out on a lot of bubbles we've had, like COVID bubble, the 1999 bubble. You guys have a little mini bubble right now to practice with. Okay? So you get a taste and feel of how the markets are so stupid that it defies any kind of logic or sense, and you just trade based on the momentum, just the momentum. All right, some other news. We had Rumble. Rumble says now they want to do AI too. They want to get into the Core Z, the HUT. So now I got to add Rumble into our list of stocks. So we got HUT, HUT, we got CORZ, we got APLD, we got CIFR, we got IREN, we got. Now I have to put back WULF. Okay, WULF is also another one. So now it's already broken out as well. So this whole area, yeah, it's broken out. So now we got to add this to the list as well. We got to add all these guys to the list. So the only one that's missing is CoreWeave. CoreWeave is still a crappy chart. And Rumble looks better than CoreWeave, so I might as well add Rumble. Rumble has a better looking chart than CoreWeave, so let's put CoreWeave on our list. Yeah, buy some Rumble. See, this is exactly what an AI bubble should look like. Okay? When companies start saying they're an AI company just to catch the wave, oh yeah, this is going to be fun. This is how bubbles look and feel like. So this thing is ready to rock, man. So Wolf, we done. We going up. And the chart is pretty strong overall anyway. This is very strong. Okay, just like NBIS. It looks like an NBIS. Like really, it just has a really strong shape here. So it's gonna go. So if we look at Rumble, all right, this is uglier. Okay, that's why I wouldn't recommend Rumble anyhow. But because now they declared themselves an AI stock, all we need is to get above $10 when it IPO'd through a SPAC. This thing's a SPAC, right? So it's been doing nothing, doing this, that, ugly chart, ugly chart. But so far, since Taco, we've been moving up. And now if it's AI, let's go, baby. That's it. Let's go back to $18 up here. Why not? Rumble can go to 18 too. There you go. Everybody wants to be an AI stock, right? Perfect, perfect, perfect. These are perfect conditions. Okay, we only have a few weeks until SpaceX. So whatever money you can make, you better do it now. You should practice everything you can in these few weeks. This is the time to practice to get ready for the real big bubble. All right. So you'll see a bubble and you'll see a pop. So learn to recognize we're moving up and learn to feel when, something's wrong and get out. So this is the time to practice. You can practice now. And if you survive this little mini bubble we're having here with the memory stocks, all right, then you'll learn what the real bubble will be next time. Next time will be crazier. Oh shit. All right, let's look at Rocket Lab. Rocket Lab doing great. Nice. Good. Rocket Lab. All right. RKLB. How about ASTS? Good. Okay, above this huge range, ugly range here. Perfect. All right. So this weekly range, very large. It's popped his head out of it. Perfect. How about Lunar? Lunar's doing its thing. All right. Intuitive Machines, LUNR. All right. Still doing the. I mean, okay. This week was really ugly. This week was really. It had bad news with the NASA thing. It's like, oh, NASA didn't pick them. And then I guess a lot of people were buying it back up. And then it's just floating back up again. So if we look at the 75-minute, I don't know what to say. I don't know. What is this? What? Huh? Okay, I don't know what this is. So if you zoom into 78 minutes, I don't know what you could say about that. This is fine though. If you look at the daily, it's fine, right? So it dropped, it touched the moving average and bounced back up. Okay, it's okay. Daily looks okay. Daily looks fine. Yeah, looks fine. Okay, look at the ADX, looks fine to me. Okay, how about 78 minute? How about this one? How about this? Okay, well this is too ugly. See, you can't tell here. No, you can't tell here. Nothing. All right. Now, remember you asked me about MSTR? I said, don't touch MSTR. This is exactly the reason why. AI is more important than Bitcoin right now. So this week will be Friday. We'll have the expiration for options and futures on crypto. Crypto futures options expire the last Friday of the month. So unlike stocks, which is the third week, crypto is the fourth week. So Ethereum and Bitcoin specifically. I don't know if the other coins have futures markets yet, but I do know, yeah, Ethereum and Bitcoin are the primary one. So now that we're down here, I'm guessing when we complete this move, next week we're done with options and futures until the next month. So maybe it will recover. So Bitcoin will recover, MSTR will recover, but I'm telling you, this is going to have a hard time fighting these resistance levels, right? We have so many idiots who bought here, who bought here, who bought up all the way up here, and every time it hits these levels, it has a hard time fighting it. When you look at a stronger chart like HUT, there is nobody up here. Nobody is up here. Nobody is up here. We already broke the last high. No, anybody who bought here stupidly enough to buy here and then held all the way down here and then waited until it came back up is already gone. So now it's just like free sailing up here. So HUT can go as high as it wants because now it's a bubble. So who cares what the target price is? This thing can just keep going up as far as we can into June. So that's why I recommend it. If you really care about crypto, you might as well just buy HUT and I ran because they were crypto companies that just became AI companies. Corzy, Wolf, same thing. Yeah. So whatever. They still have Bitcoin. So if Bitcoin goes up, it helps them. But if Bitcoin goes down, it doesn't really hurt them that badly because they all pretty much transition into AI. Okay. After that, Circle, same thing. Yeah, right. One of you guys asked me about Circle, CRC, same problem. This is the same problem as MSTR. That's why I said, like, why get this? No, no, no. I don't want this. I don't want this. All right. Okay. So if you want leverage for Wolf, LULF, I mean WULF, you have WULX. Okay. So there is a leverage for that one. So good luck. If you wanna take more risk. Personally, I think this is risky enough. I have leverage hut now, and I just have the rest normal. Um, whichever one is gonna be number 2 or number 3, and who knows, hut might just be replaced by Core Z or APLD if APLD and Core Z keep doing better than hut. Yeah, I'm just gonna switch those guys to leverage. I'll just switch them out. All right. So there you go. Rumble doesn't have a leverage ETF. So if you're wondering about Rumble, I didn't find any. Okay, another one to talk about again was Hims. So the peptides and Ozempic and Wegovy and all that stuff. So it survived. It survived. It didn't drop into this zone. It bounced above it and it came back over here to 25. Yeah, maybe I'll buy it. Maybe I'll buy some Hims. I don't know. Hims also has a leverage ETF, I think, but I'm not gonna do leverage on this one. I I might be tempted just to start building a position again over here. So I've been waiting for this thing to complete, like zigzag, zigzag. So now, okay, maybe I'll bite. I'll bite. I'll bite this one. HIMS. Okay, go for it into next year. So I might start a really long position over here for this one. All right, I'm gonna talk about IOND maybe if I get through the video because I have a video specifically talking about the fundamentals of this company by that Canadian guy. Okay, so it's been dancing like this since earnings. Terrible day today. Might be the time to look for an entry. If this thing survives this week, and let's say it drops to 75 ish, maybe I'll bite. Maybe. If I'm feeling lucky. But this is very risky. But it's an AI stock, so if everybody's so happy about AI and they don't want to do memory anymore, might as well take a shot at this. But the problem here is if this thing is a range, if this thing goes to 75 and this whole thing is a range, that's pretty terrible. Okay? That's pretty terrible. But because the range is so huge, bouncing between 75 and 115 could be tradable, could be very tradable. And you never know. By the time we go to June and July, maybe the market is so insane that this thing will just break through 115 for no reason. Because why not? This market is so stupid that who knows, right? But let's say it does something else. Let's say it just like does this, right? It just kind of like stabilizes into a small tiny range up here, right? Into June. If it does that, that's more bullish, right? I told you, when you have a wide range, no good. But when you compress, right? When you compress, then you're building energy for something larger later on. Just like here, right? You see this? The compression of the range, and then you expand the range, right? So either it's going to compress and crash, or it's going to compress and moon and go to the moon. So I don't know which way right now. We'll have to see. We'll have to see when we get there. So I guess you can put this on your watch list. Yeah, why not? IOND, because like this thing, the way it's doing right now, could be interesting later. Okay, anything else? No, no, no. NVTS, yeah, pull back. But when you look at the bigger picture, like, yeah, I mean, this. Yeah, the only problem is like you see the problem, right? If Micron dies, and it died to a little bit today, it pulled down everybody else in semiconductors. So if it dies more, this is kind of dangerous, right? It could just like slam right here by Friday, because Nvidia is not helping. Nvidia is not helping at all. Nvidia has been totally not helping here. Nvidia better recover. If Nvidia just goes right down through here, you're done. You're done. And then Micron, if Micron follows with Nvidia down, you're done. Everybody else is going to follow with it. It's just going to drag everything down, because I think you guys could tell that these stocks don't move independently anymore. All these stocks are moving together with the ETF. The ETF is controlling this thing now. And the ETF is basically a proxy of the Nasdaq, because semiconductors makes like more than 40% of the S&P 500 and probably the 50% of the Nasdaq 100. I'm guessing at this point. So yeah, we are dealing with dangerous things. So watch Nvidia and Micron. If they follow down together, yeah, you're done. You're done with semiconductors. Everything in semiconductors, stay away. Stay away. Yeah, don't touch that. Don't touch that shit. All right? Yeah. Because yeah, we're going lower. And hopefully that money goes to HUD, that money goes to Rocket Lab, that money goes elsewhere. Hopefully it doesn't mean like it just crashes the whole market. I don't know. It might, but hopefully it doesn't. Okay, let's see what else. Okay, so you're maybe gonna look at Core Z again. Let's see what's Core Z again. Okay, let's look at the 78-minute on this one. So yeah, definitely I like this. Yeah, for sure. For sure. I mean, yeah, all these guys are working as just as I expected. They are building their energy right now. They're ready to go. They're ready to rock. We just need a catalyst, a simple catalyst to push these guys to the next level. All right, they're ready. They're ready. Um, so hopefully that money that goes out of semiconductors goes over here. That's what I'm hoping for. Did some point and figure NVTS, got some 68 to 75. Okay. Okay, let me do this. Let me see what the DeMark says. Let me see what the DeMark says. Do NVTS. NVTS. Okay. NVTS. Okay. What's this? So daily, we got 13 count on the daily. 5. Okay. There's no target here anymore. We already completed our target. Okay. So then let me get this tool. Let's say I started here. Nope, that's not going to work. Okay, how about over here? Nope, that's not going to work. Let me see. How about over here? Okay, so maybe I think the first target will be 51 for NVTS. Okay, so let me look at the 78-minute then. See if I see something different. $51. Okay. Yeah, it already completed all its targets for the DeMark. DeMark already completed its targets. We have to see a new uptrend. We have to see a new uptrend for NVTS to get new targets for this one. Yeah, so for the DeMark, nothing really, except for like maybe 51. If it can get there, 51 would be the next intermediate target for this one. Okay, so the weekly, we've already hit it. So we need a pullback to the to see what the next target is on the weekly. So yeah, we don't know on this one. No, don't know yet. So we have to get more data for this one. If you want to look at the mark stuff. All right. So yeah, that's about it for that. Okay. Okay. So let me see. I got some old demarks for the Micron and SOXX. Let's see. What's this one? Let's go here. Let me look. 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 Can I put up the image here? Let's see. What's this one? Oh, I did one for Korea. I did one for Korea. 9,900 for the Kospi for Korea. So I did that a couple days ago. I said, well, if the Korean bubble still goes, then 9,900 is the next target here for the Koreans. So there we are. We're dancing around 8,000. So next move, I guess, is 10,000, huh? From 8,000 to 10,000. There you go. That's a lot of move there. So hopefully the Koreans can make it because we need the Koreans to pump our markets. If the Koreans don't help, it's no good. No good. All right, SOXX, 673. Next target. Okay, there you are. Are you ready? Can you get to 673? Oh, bro, this bubble is gonna be the most hated bubble of all time. Well, can you believe Micron going to 1,200? I can. I could definitely see it. I could definitely see it. It's not gonna be pretty for some people. Some people are just gonna be screaming in agony. That's what you get for shorting. Don't short bubbles, guys. You short a bubble, you better be damn sure you know when the top is. Most people won't know when the top is. That's for sure. You either gotta be Warren Buffett and stay the hell out, like don't even play the game, or you gotta just go long until you can't stand it anymore. That's all you can do. That's really all you can do. All right, let me see. Let me see here. Oh my god. All right. Here, I'll give. Let me see if I can make you a mod. Let me see if I can make you a mod, and you can post your link. Let's see. I never did this before. How do I make people mods? All right, here you go. Yeah, you're a mod now. Have fun. You can ban whoever you want, I guess. Yeah, go have fun. Post something. Let's see. Yeah, post some links. Oil and rates finally calling Trump's rug pull. Man, I don't know what the heck. Man, Trump does whatever Trump wants. Oh, okay, good. That's a good that's a that's a good clean looking chart I see. Very nice. Very nice. You figured out how to do it. Oh, I like this. Very good. All right, let me put it up. Oh, very beautiful. See, that's what I want to see. I want people to learn how to fish. Ban everyone. Yeah, ban everyone. Fuck yeah, ban everyone. I don't care. I think everybody's about streaming. Everybody cares about streaming now. Oh, I'm a streamer. I'm a streamer. Whatever. May as well just be a VTuber. Make some money that way. Did you guys see like there was like a little anime or some kind of con. I don't know if it was anime con, but there were these dudes sucking these girls' toes, man. Like they were pouring like vodka or like rum or some shit over these toes, and They were sucking it. I was like, what the hell? This world's stupid, man. There you go. Take a screenshot of that. Thanks to Tropes. He made a nice chart for you guys. Look at that. Look at that point and figure. Beautiful. Look at that range here. Look at that. Now we're going to go up to 68 and 75. Oh, hell yeah. I don't know when it's going to get there. It might take a while to get there, probably next year. I don't know if it's going to do it in June. It doesn't tell you when it's going to get there, right? So it's kind of the problem. For the DeMar counts, we need to have a consistent run up right now. We kind of lost that in the couple today. I guess a couple days we kind of lost that. So let's see. Let's see what happens. Yeah, 55. Oh, it's okay. So if you have a lesser count, yeah, because like Bruce always does a conservative count, right? He always does a conservative count, and then if the thing keeps moving up, then he'll extend it longer. Yeah, that's true. What the way he does it is like he looks at a normal chart and then he tries to see where the Wyckoff stuff is, and then he like determines, okay, this is where the Wyckoff range is built, and then he goes like, okay, this is the spring, this is that, this is this, and then he tries to like base it off of that. Yeah, so I don't know, he's more experienced on that stuff, that's for sure. So yeah, we probably have to have a little break at 55. We have to rest there before we continue on higher. Probably. Maybe that's the intermediate target we'll hit in June. But if June is going crazy, then yeah. Because I don't know about the whole SpaceX stuff and the wash, what's really going to happen. The real big problem is that the options will expire, So let me put back the chart, and I'll show you the issue here that we have. Okay, so let's look back at the SPX. Okay, I don't know if I did it on this thing or not. Well, this is good enough. I think this is good enough. So the green line here is where pretty much we had but this is where the JP Morgan collar is. The calls of the JP Morgan collar is over here. Now, let me add the JP Morgan stuff here. JP heck? Is it this? No. How about this? No. JPQEX? XE? Oh man, I don't know. JP Morgan. Oh man, JP Morgan. Oh my god, what is it? SPY, SPX, the ETF. I don't think I can find it this way. Let me try to find it. Hold on. Shoot. JPAGX, something like that. JHEQX. Okay, there's no P in there. All right, fine. All right, so let me put this here. New price scale. Where is it? Where'd it go? Oh, it's not here. Why is it not here? What happened? Where is it? Why don't I see you? What's going on? It should be there. Why can't I see you? What's going on here? What's this? Runtime error. What the heck? Never seen that error before. You joking here? You kidding me? Man, man, don't tell me I gotta go to my Twitter and get this now, because I screenshotted it before. Oh my god. You serious? No way. What the fuck? Come on. Okay, same percentage scale. Nah, that's not gonna help, huh? That's not gonna work. Bro, what? I don't know what the runtime error is. I don't know what that means. But essentially what you're gonna see is like it's just gonna be like, yeah, 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 yeah. It's gonna be like that, right? And then all of a sudden it gets stuck here and it's flat right now. So the people that bought all those JP Morgan the ETF shares, like they're screwed because they didn't get any of this. They didn't get any of that because you buy that, you get protection going down, but when we go higher, you don't get the gains. You don't get the gains here. Okay? So let me see. I probably can find it on Twitter actually. Here, let me see. I could probably find it pretty quickly because I can search my posts and then just search for JP or JHEQX or whatever, and I could find it. Yeah, I could find it. But in any case, by the time we get to June, so the third week of June, on that Friday, after Kevin Warsh speaks, so, so hold up. Okay, hold up. Okay, blah blah blah. Let's see. All right, so yeah, if I can find it, yeah, okay, I'll put it up. But like, if we get to that June, right, that third week, you know, we're All right. All right, hold up. Everything. Twitter crashed everything. Hold up. All right, let me I got to try to find the damn thing. Here we go. Profile. Fucking Twitter, man. So annoying. Okay, let's see. Blah 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 blah. Hold on. Try to find this sucker. And then we can get on JHQX. Hello. Okay, is this the one? Okay. Okay, that must be it. All right, good. All right, save my picture. All right. Okay, get rid of this one. Get rid of this one. All right. All right, man. I don't know why TradingView didn't show that. Runtime error makes no sense. Okay. All right. There you are. So that blue line stuff. All right. So that is the JP Morgan, that blue line. That's what's going to happen. So the third week of June there. So it's going to go all the way back down there on the third week of June. Maybe that's what it's going to try to drive towards. Okay. I don't know. Though. I mean, we've been doing some weird stuff lately. We broke through that JP Morgan level like it was nothing. It was just butter with a hot knife. But we do know with the options stuff that it's going to get crazier as we get closer to the expiration of that third week. And Kevin Warsh and the SpaceX, the volatility is going up a lot higher. So either we just go bubble mode, completely out of control by that third week. And then after that third week, the last trading day of the month could be very interesting. A lot of investment firms and hedge funds and all those guys, they will change their positioning in the portfolio. So the last trading day, so the week after, it could be like going crazy. Either they'll support the bubble going into next quarter, going into July, or they'll try to smash this thing down. Okay, so between SpaceX IPO, so SpaceX IPO is the Friday of the week before the third week. And then the third week, we get Kevin Warsh on Wednesday. And then Friday, options expiration. Then the Monday after option expiration, we got to get through, right? And then we got to go all the way towards the last trading day of the month. So anything could happen then. Anything. We have Juneteenth on that Friday, actually. So it's going to expire on a Thursday. Actually, we have Juneteenth, right? We have that new federal. The stupid Biden made a Juneteenth holiday take away one trading day for us. All right, thank you. You know, I don't want holidays that don't help you take a day off. What the hell was the point of that? And it happens to land on a Friday. Great. So now our expiration is on Thursday, 18th. And then we got another week after that. And then we have to wait for the Tuesday, the 30th, the 2 weeks after all these things happen. Oh my God. I don't know. Anything could happen. Anything could happen. Yeah, 6,800. Yeah, 68. It's basically 6,800 something. It varies. Some people say it's around 68, like 30. Doesn't matter. 6,800, 6,850. It's a lot lower than where we're at, right? We're at 7,500. Come on. Like, we're gonna crash down like that much before the month is over on June. Wow. That's scary. That's really scary. So after the options expires, the final full week of June, this thing is just gonna roll over and crash back to 6,800 something. Just because JP Morgan has a whole bunch of calls over there. I don't know. It could. That's why I said these options like really mess up everything. These options really mess up the whole lot of the game. Like, I don't even know what's going on. If you can try to predict it, good on you. Like, how much mathematics do you have to do to predict the future now? Like, way too much, in my opinion. And even then, you're not really 100% sure. Fuck, crazy. So, anyhow, there you go. I think not much else to talk about. But I missed before we get into our videos, because we have a lot of videos to talk about or to go through. Okay, I have a couple. Oh, only one. Okay, I only missed one. Here, this stock, my favorite stock, if you guys remember. So I'm gonna have to share the screen again. We'll see. Blah blah blah. Where is it? No. No. Come on, hurry up. Okay, over here. All right. So let's get back to this. AER, AEHR. So it's been doing really well this week. Really well. So let's look at the range right now. Look at it. It got above the range again. So this is the third time it's been trying this. Are we done? Are we ready to go higher? If we are, then you have to, if you do the point, you probably have to count this whole range here from 2021. So 2021 all the way up here, and it broke out, and we have a little range here, a stair step, and then this thing is going to keep going higher. This is a huge range. Do the point figure on this guy. I bet you it's going to be very high. So AEHR, AIR, I guess I could pronounce it that way, AIR Test Systems, is going to be the winner. This is my favorite. This one's my favorite, okay? If you think like ATX or whatever talking about last time, if you think that ATXI, let's see. I mean, I don't know what is AXTI. If you thought this was good, this thing will probably be a lot better. Because this thing didn't even build any range, right? It's kind of like a new star. Like, it's just like, what is this? What is this? Do I have to go all the way back into the 90s to figure out if this is a range? I don't know. Maybe it was. Maybe this was a range. you could consider that a range. I guess. I guess if you count this whole thing, that would make sense. So look at air. Air will be the next one. I think a lot of stocks will start looking like that AXTI rolling. Once we get the bubble rolling, an insane market. Once we get that. Oh. All right. So, which one should I start with first? Let's go with this one. Let's go with this one. Damn, there's no audio on this one? Crap. Oh my god. Did this thing download without audio? Oh my god, I gotta re-download this thing again. God damn it. Ugh. All right. Maybe I can talk without the audio. Okay. I know what this guy is saying. All right. Let me see. Let me see if I can explain what he's saying right here without him saying it. Okay. Forget this. Let's go. Come on. Forget that. What was it? Okay. This chart. This chart's important. Okay. So the blue thing here, all right. The blue thing here is dispersion index. All right. Some kind of dispersion index. Let's see. Oh man, I mean, I think it's better if he just talks. He just talk. If I can download it again, I probably should download it again. I don't know. Everything's been so goofy today with the YouTube downloading. It's like it's so goofy. It's just like what? What's going on? Oh man. I got always taught this time. Freaking like downloading this stuff. Okay. In the meantime, yeah, I'll play this short one while you guys germinate on it. How about that? While I figure this one out. Because yeah,
Hi, gang. Larry Williams welcoming you to StockCharts.com. It is time for the summer season. People are going to start traveling. Even with these high gas prices, people will be moving around. That means the markets will be doing things, moving around as well. So I'd like to give you my view of the future, where I think the market's going. Let's take a look. First, I want to look at our market tools. Really, three major tools in the marketplace. I don't think a lot of people know how to use them. Fundamentals are critical of a marketplace. Markets move for reasons, fundamental reasons. Fundamentals show the value. Opportunities. We'll be looking at all of those things today. My five best friends in think you can live with just cycle or just value. You need everything to really be successful at this business. Well, let's start to look at some of those things. The big thing I'd like to focus on in terms of cycles is the NASDAQ cycle. This has been a strong cycle in the market going back 2009. You can see this red wave. The overall cycle is a low here, a low over here, run up and a run down. I want to focus on the strong up leg. We see this red part of the cycle. In other waves, and some of these waves are more significant, you see, than other waves in the marketplace. This is the wave we're in now. You can see in 2016, cycle wave took off again, the market rallied. And that's where we are now, guys and gals. This was 2023, and we're in a very bullish cycle wave in the NASDAQ. Now I focus on the NASDAQ a lot because the Dow has been kind of squirrely this year. I started looking more at the NASDAQ, and I see here it is. We're going to enter a very bullish wave in the cycle of the NASDAQ, and that cycle is an up cycle. In fact, if I look at this, going back to the inception of the NASDAQ, we have rallied. That's right. 90% of the time we've been in this wave of the cycles and start to turn up in June, a little pullback in August, and then further higher. So, gosh, this is like a bullish opportunity to me. Now, what prices haven't done, though, people would like to see prices decline to buy. That's human nature. But sometimes they just go sideways and then take off. You can see that in some of these past examples. Prices were sideways and then took off. So that's not an exception. See, prices were sideways in here, and then prices took off to the upside. We don't have to have a decline to get a rally. Most people are looking for decline to get a rally, but we haven't seen much of a decline here. So if we get one, great. If we don't, I still expect this is a bullish time in the stock market. In fact, for my 2026 forecast report, we said expect higher prices in 2026, buy market breaks. I thought the absolute low, and I was wrong in saying that, would be about June 16th. That really should have said the cycle low, a time to be a buyer in the market. So we're about June, about the middle of June, I would expect the cycle that we've just seen to really kick into the upside, regardless of where we've been going up or down. Bottom line of the forecast report, expect 2026 will be another bull market. That hasn't changed. The question that forecast report, does that mean higher inflation in 2026? I said, I sure think so. And we have seen higher inflation. The big thing about inflation is its relationship with the bond market. And the forecast report said it's for lower rates into the first of 2030. That's a long-term view. So let's look at bonds.
Hey guys, it's Grayson Rose. I hope you're enjoying this video here on Stock Charts TV.
Oh, okay. We got an ad. All right. Let me go forward. Ad. All right. All right. Yeah.
Same tools chosen by the pros that you follow here on Stock Charts TV. Now let's get back to the video.
We're going to stockcharts.com. We see the blue line is the seasonal pattern for the bond market. It's up right here, right now. We should start to see a rally we usually have in the bond market. Notice I'm using weekly charts here. The last time we saw this rally phase in the seasonal pattern was right back here. We saw it over here. So we're in a bullish phase. And then we can also look at my cycle forecast. That's also available stock chart. It also says bonds should start to rally right here, right now. It's did a pretty good job of telling us in advance. That's what cycles do, show us in advance when to expect declines in the bond market, rallies in the bond market. You can see there's been a pretty good forecast of what's going to happen. But more important, our money flow index shows that large money has recently started buying the bond market. And the last time that happened was over here, saw it over here, we're seeing it over here. These are really bullish fundamental considerations when money flows into the bond market from professional traders. And that's what we've seen recently. It's really started to happen here. One reason to be bullish for bonds, but there's more. Commercial traders from the Commitment to Trade report, if we look at this now going all the way back to 2023. The red line shows their actual buying. As this line comes up, they're buying more. They were heavy buyers coming into this low, heavy buyers coming into this low, heavy buyers at this low. And look what they've done recently. Buy. The entire decline. How much did they buy?
So if the big commercial buyers are buying up bonds, then that probably means they think Kevin Warsh is going to be very accommodative. So the only reason you're going to buy these 30-year bonds is because you think that the 30-year bonds will not get much lower than 5%. Okay. So remember, bond prices go down, yields go up. So the 30-year bond right now is hanging around 5%. That's a great deal. I can buy a 30-year bond from the Treasury Department, lock in 30 years of 5% yearly interest. Okay. Without any risk. Well, the only risk is basically you don't believe that the United States will pay you anymore. Like, you don't think the United States will last 30 years, essentially. So if you think the United States will collapse before 30 years is up, then yeah, you probably don't want these bonds, right? Or if you buy those bonds, you want to pass it off to somebody else later on and go like, hey, you can have these bonds now. I don't want them anymore. And then they can have the 5% and you cash out. That's the other way of doing it. So that's a good deal. Very good deal, right? Several years ago, you could have got a T-bill for pretty much 5% for 3 months, 1 month, 3 month, 6 month, 1 year. You got like 4 to 5%. Now you can get a 30-year bond, lock in 30 years worth of 5%. And so that's very tempting. So the only reason you want to buy bonds now on a 30-year is because you don't believe that it can get any worse. Like, you don't think that you could get like a 6% bond, right? If there was a 6% bond, hell yeah, that's even better. We're talking about people that have billions upon billions of dollars getting 5%, right? When they see 6%, their eyes will light up. Wow, 1 more percent for 30 years, I'm in. That's passive cash coming in without any risk. I don't have to worry about, well, will Intel not crash next year? No, you don't have to worry about that kind of shit. Stock market is crazy. Don't ignore that. Bond market, you like that? You like that kind of like boomer type of investing? There you go, right? And most of the really rich people, they don't play in the stock market. They just buy bonds. They hang out in bonds. They're perfectly happy getting that 5%. And if they see 6%, they're getting it. So if they're buying in now, they don't believe we're going to 6%. That means, guess what? Probably those 2-year yields isn't going to go much higher. Okay, so this will ripple across the curve. They call it a bond curve. You have a 30-year, you have a 20-year, you have a 10-year, you have a 7-year, you have a 5-year, you have a 2-year, you have a 1-year. That's your curve right there. So whatever happens on the long end is probably a predictor of the short end of the curve.
23. In other words, they've been aggressively long. They've been doing a lot of buying in the marketplace. And traditionally, prices rally when there are big buyers in the marketplace. When we consider that we're also at a seasonal low, a cycle low, and on an intermediate term basis, money has flowed in on the long side of this market. Oh gosh, guys and gals, I think we have a buying opportunity here. Just where? Well, let's take a look. Now we're looking at a daily chart. Here's the seasonal pattern and daily chart. You can see we're right at that low. Money came into the marketplace. So my strategy is going to be to wait for the first short-term pullback in the bond market and then look for a buy point. We started to rally off low here. We'll probably go a little bit higher, but at some point we will have a pullback. So what I think we've seen is the first speculative up move in the market, pull back. As we pull back into this next decline, there will be one. I don't know when, but in the next 3, 4, 5 days, we're going to start to see a pullback in this market. That's going to set up, I think, the springboard for the natural cycle and for the seasonal pattern to kick into this marketplace on the upside. So there's a really good trading opportunity I want to point out to all my friends at StockCharts.com. One more look at the
One more thing I got to mention to you guys is that the bond market being bullish doesn't necessarily mean it's a good news. Okay. I gave you one interpretation. I gave you the interpretation that the inflation issue will not get worse than it already is. So people buy for the future. They think like, well, Kevin Warsh is probably not going to be that aggressive on inflation. That's one interpretation. The other interpretation is that like the inflation is already baked in the cake. We already know how bad inflation is going to be. It can't get any worse. Maybe AI will, help us or whatever. That's one way to look at it, right? The other way to look at it is they're buying a lot of bonds is because they think something bad is going to happen in the stock market and they're going to hide in bonds. That could be another interpretation of it. So it's not guaranteed that the bond market going up is actually a good thing for the stock market, right? There are times when stock market goes up and the bond market goes up. There are times when bond market goes up, stock market goes down because they're hiding in bonds because they want a safe place to hide out when the big crash happens, and they want to lock in that 5%. So when's the pullback? Will it affect stock? Yeah, I don't know. I don't know how it will affect stocks, right? We only know what the bond market might do, but that doesn't necessarily mean we know what the interpretation of that is. What I gave you the two interpretations. Two interpretations is that either Kevin Warsh doesn't aggressively fight inflation, lets inflation do whatever. The other interpretation is that inflation is not that bad going forward. We already got the peak inflation. We will get inflation numbers tomorrow. Tomorrow morning, 1 hour before the market opens, you will see inflation numbers. And if it's really bad, worse than what the market expects, then we will have a big old crash in the morning. But if it's not as bad as they think, it's going to be bad. But it's just what the expectation is the problem. Is it going to be worse than what the market thinks it's going to be? We all know inflation is going up. If it's going up higher than what the market likes to see, then bye-bye. The yields are going to go higher and the market is going to crash.
The stock market, there's another interesting explosive wave in the Dow Jones Industrial Average. Notice a wave is part of a cycle, but we go up and then boom, we rip off to the upside. Boom, we rip off to the upside. The market's coming down, we hold that. Whoa, we get this big rally in the market for what? Almost 4 months. So this wave is apparent, and we've seen it quite often before. There's a kick up and the market goes up, kick up, the market goes up. See it over here, the market's going sideways, right? Then boom, away it goes to the upside. And the last time we saw it right here, went sideways, explosive move to the upside. This is where we are now. We're in this trading range with a bullish bias, but starting about June, late July, August, we get in the explosive part of this.
So as you see, by September, we should be able to move up again. So I think, yeah, we will see something happen up until September. Maybe we go sideways. Maybe we crash. Maybe we crash hard. But after September, going into the midterms, I think we're safe. Okay. I think once Trump loses all his power by midterms, the market is going to get happy. That's probably what's going to happen, right? The midterm elections, all the Democrats will win all the seats. Everybody is basically going to go like, well, Trump is going to be lame duck for the next year or so. And everybody expects Newsom to win, right? I mean, I heard already news that J.D. Vance is going to not run for presidency because I think J.D. Vance is basically the technocrat appointed person, right, for the next events down the line. Newsom is probably what they think is going to win. They're just going to be like, well, I think it's over. Democrats are going to win the next election cycle, so let them win. and then we'll just come back later after them. I think that's basically what they're going to say. So if JD Vance is not going to run, then that's it. They're just going to put some loser up there to try to fight Newsom, who they know is going to lose, and that's it. See, this is the thing. There are no cards. It's all scripted. It's all scripted. You get the president who they deem is right for the moment. The person right for the moment now is Newsom. That's it. No, it's not the market. It's the narrative you make. This is WWE. Politics doesn't matter. Everything I've told you is politics doesn't matter. Politics doesn't matter. They put the person in the job who's you get a heel, right? And you got a baby face. You get a heel, you get a baby face. You get a heel, you get a baby face. Bro, politics is WWE. It's not reality. It's what they put on TV to make you think you have a choice. Okay? You never had a choice. It was always an appointment. Everybody's appointed. Yes, presidential selection. Anybody that believes in democracy right now is a fool. I'm sorry to say, you're a fool. You've always been a fool. It never mattered. It never mattered who won. All right? They could put AOC up there if they wanted to. You're just a puppet. You're just a puppet.
Market. So you might want to consider that for your longer term investments. This explosive wave is coming up in the market. We are in a bullish pattern, and the explosive wave will become before not much longer. So that should certainly be part of your investment strategy and your investment thinking. So the bottom line here, is stay the course. There's no bear market. I know the Cassandras are out there. It's Donald Trump, it's not Donald Trump, it's money, it's whatever. No bear market.
That's right. Donald Trump, no Donald Trump, it never mattered. It's who's the Fed chair. Who's the Fed chair is the most important thing. Who is the Fed chair? That's it. Yeah, presidents are middle management, basically. And, Newsom will be the great fall guy. They get Newsom up there. China gets more aggressive. Newsom looks weak. They blame the Democrats. Then the GOP comes back. They'll put back Vance or somebody else because they need a technocrat, right? So JD Vance is basically a technocrat appointed person. He basically has an H-1B wife, right? He's perfect for the new America. You got an Indian wife, perfect. You can shill to the H-1Bs, blah, blah, blah. That's all it is. That's all that matters.
Stocks will trend higher. So your strategy, buy breaks. Don't be afraid of breaks. Step in and buy weakness in the market. We continue to be in a bull market. So that's it.
All right. So, yeah, Larry Williams, really good guy. Master trader. He's been in the business so long, so I've mentioned him so many times. Right. His daughter is Michelle Williams. She dated Heath Ledger before he died. She and him went into a trading contest together for fun. They won the trading contest. They made they turned $10,000 into $1 million or whatever. So yeah, listen to these old guys. They know what's up. They've been around so long. They've seen so many markets. So yeah, anytime you see Larry Williams on the stock charts for free, yeah, definitely listen to him. Okay, that's it for that. Let's do some H1B content. So we're talking about tokenomics. Okay, let's go to that. I did download the video. That's why you saw the audio and the video click in and out, because I was downloading at the same time. So whatever. Okay, so we're done with that. Let's go to the main part of the show. Let's see. So I got that INOD. I got that. Okay, so this is the video I wanted to play last time. So we're going to talk about Sam Altman. Yes, correct. 8:30 EST. Yes.
Fundamentally, our business, and I think the business of every other model provider, is going to look like selling tokens. They may come from bigger or smaller models, which makes them more or less expensive. They may use more or less reasoning, which also makes them more or less expensive. They may be running all the time in the background trying to help you out, They may run only when you need them if you want to pay less. They may work super hard, spend tens of millions, hundreds of millions, someday billions of dollars on a single problem that's really valuable. But we see a future where intelligence is a utility like electricity or water, and people buy it from us on a meter and use it for whatever they want to use it for. The demand that we see for that seems like it's going to continue to just go like this. And if we don't have enough, we either can't sell it, or the price gets really high and it kind of goes to rich people, or society makes a bunch of sort of central planning decisions that I think almost always go badly about, we're going to use our limited compute supply for this and not that. So the best thing to me throughout all the history of capitalism, innovation, whatever you want, is to just flood the market.
Yeah.
Okay, there you go, guys. So intelligence will be a utility, just like air and water, internet, you outsource your thinking to the computer, to the thinking machines, just like Dune, right? You have thinking machines, and then humans don't have to think anymore. And then you have a revolt, I guess. Humans will start. Actually, did you hear the news? The government has put a task force to fight AI terrorism. So anybody that wants to blow up a data center like the Unabomber, they're looking at you. Any of you guys planning to fight AI? You're on a list. You're on a list. All right. Clip suggestion, go to Sam Time. Are you talking about Sam Hyde? What is Sam Time? Who's Sam Time? Are you talking about Sam Hyde? Okay, anyway. All right, here goes the real. Here's the H1B. Here's the H1B video. Here you go, guys. Here you go.
Not all tokens are created equal, and there is a way to look at token value. There are two key factors that impact token value. One is the intelligence embedded in the token, or how much intelligence does the token carry, and the other is how fast does it arrive.
Welcome to the NVIDIA AI Podcast. I'm Noah Kravitz. I'm here with Shruti Kopakar. Shruti is a member of the accelerated computing team here at NVIDIA, and she focuses on inference. And we're here to talk about tokenomics. As data centers become AI factories and produce intelligence for the new industrial revolution, this word tokenomics has been floated about. It's a useful term, but maybe we can break it down with your help, Shruti, so that it's really something that business leaders can understand and take into practice.
Yes, absolutely. Well, first of all, thanks a lot for having me, Noah.
Thank you.
I am very excited to dig into the economics of AI, or tokenomics. And as you said, it is a term that gets used quite a bit, and I welcome the opportunity to help define it, so to speak. So the way to think about tokenomics is it's about how tokens are valued, supplied, consumed, and monetized. And what that essentially maps to is token utility, which is all about token value, token supply, and this is where your AI infrastructure decisions are, right? Thinking about what infrastructure to invest in that will maximize your token output while minimizing cost. Then there's token demand. This is where customers and organizations think through what is their number of users, how many use cases, what types of use cases. So really sort of mapping out the volume and velocity of the tokens that they need. And then finally, there's token monetization, which is taking the tokens and turning it into business value. So those are sort of the four pillars for tokenomics. And it's super important to understand all four of those and how they relate to each other to be able to deploy AI successfully.
So let's start at the top then with utility or value. How do you define the value of a token? Are all the tokens worth the same? Do they have differing values? Is there a better way to look at it? How do you approach that?
That's a really great question. And you're right, actually, that not all tokens are created equal. And there is a way to look at token value. There are two key factors that impact token value. One is the intelligence embedded in the token, or how much intelligence does the token carry. And the other is how fast does it arrive, which is essentially the interactivity. So to unpack that a little bit, the intelligence of the token is dependent on the model that produced the token. So more complex, more intelligent models will produce tokens that in general have much more intelligence.
Higher value, okay.
Yeah. And then it also depends on the context that the models looked at. And generally speaking, the longer the context that you sort of allow the model to look at, the better the accuracy, the better the intelligence of the tokens. Now, I say generally because there are cases where if the context increased too much, then the model quality, the output quality can degrade. But I don't want to rabbit hole into that. Generally, more context does kind of equate to better intelligence.
Right.
So that's one aspect.
Okay.
And then, as I mentioned, how fast the token arrives is the token interactivity, which is essentially tokens per second per user. So it's the rate of token generation. And so if you look at token value as a spectrum, on the one hand, you have these basic models with shorter contexts generating tokens at not that fast a speed. And then on the other extreme is these more complex, more intelligent models with much larger context and generating tokens that are really fast. And across that entire spectrum is your different use cases and how you map those use cases to the token value. Right. So of course there is an absolute way in which to think about the token value, but there is also a relative way with respect to the use cases in how to think about it. And we can unpack that a little bit if you want.
So is it fair to say that the value of the token is tied at all to the task that it's hand as well?
Yes, and that's exactly sort of what I was trying to get at when I said that, like, you have to think about mapping the right use case to the token value.
Right.
So as an example, we said, like I said earlier, right, that tokens generated by more complex intelligent models are more valuable. But that's in an absolute sense. Your use case may not require that more complex, more intelligent model. And then that additional value is completely useless to you.
Right, right.
One example of this is domain-specific applications, where in a very narrow context, a post-trained, which is fine-tuned, small language model, so a much smaller model, can give you just the value you need. In fact, in some cases, even better accuracy for that given task. So you don't need always the big, large models. And so relatively speaking, you need to map where on the spectrum of token value does your use case sit. Same thing is true for the interactivity piece, which is agentic applications absolutely need the highly interactive tokens.
Right.
But you may have applications like chat interfaces or enterprise search, which don't need that level of interactivity. And so that is very critical when you are thinking through your sort of AI deployment decisions of where to map your use case to what token value.
So when a business leader is thinking about demand and thinking about mapping out tokens to use cases, and the different use cases have, different values associated with them, what's a good approach for someone who's looking at what their org is doing, what their different team members need? How do they start to get a handle on, well, how many tokens are we going to need to produce and how many of each kind?
Yeah, so use cases are extremely important when thinking through token demand. And there are 3 layers in which you can think about this with improving levels of forecasting accuracy, if you will. So the basic sort of, back of napkin math is look at how many requests or sessions the user is going to initiate in a given day or month, and then how many tokens you need per request or per session.
Right.
And those 3 numbers put together will give you your base demand for a single day or a month or whatever is your time period of analysis. Now, that is the base and very, very sort of simplistic look at it.
Right.
There are multipliers that you do need to account for that will dramatically change your understanding of your token requirement. And A couple of those are, number one, are you using reasoning models? As we know, like reasoning models use thinking tokens,
Right.
which never get seen by the end user. And oftentimes when AI is deployed, you can actually set thresholds on how many thinking tokens are allowed per interaction. And so when you are estimating demand, you do need to think through, are we using reasoning models? What are our thresholds? What do we expect the peak and average to be on those, on that use? So that's one. Second is agentic. Agentic is a huge multiplier because any use case, if you're deploying it in this sort of agentic workflow context, then there are multiple sort of turns loops that might happen that can increase your token demand significantly. And then finally, the last factor is something called cache hit rate, or the KV cache hit rate. And for those listeners for whom this term might be new, KV cache is sort of like the short-term memory of a model. And so anytime an input request comes into a model, it needs to process it. But if it's already seen that input request before, then many times it actually gets stored in the cache, and then when it comes in again, it doesn't need to recompute it.
Right.
It can just use those cached values. So those are some key factors to kind of look at to get to a higher degree of accuracy when thinking about token demand. And then the final one is demand variability, which is how is your demand changing in a day? Like sometimes you may have products that get used quite a lot in the morning hours, but not so much in the evening, or vice versa. Same thing with seasonal variability. For example, retail providers or e-commerce will see a surge during the holidays when they're trying to push a lot of products out, right? So you do need to think through those. And then of course there is the user growth. So
Okay. So I think you get the idea. Like they want to use tokens as a way to count how much, right? Like you remember Sam Altman was like, "Oh, we're going to turn it into a utility." So how do you measure your utility bill, right? It's like kilowatt hour. If it's natural gas, it's like what? What are you, BTUs? Yeah, in America they use BTUs, right? They still use British thermal units. So yeah, in America it's BTUs. Therms. I guess therms or BTUs, something like that. I don't know. So kilowatt hours, BTUs or therms, and now we have this token BS here. So they're gonna measure everything based on, oh, how many tokens did you consume? Then I charge you based on tokens you use. Now, are all the tokens valued the same? That was the question. I don't know. So if you use like a more intelligent model, they're like the tokens are going to be like, oh, these are the smart tokens. So we're going to charge with one smart token per minute or per second or per query or whatever, and then equals like how much I have to pay. So Microsoft is already like, we don't want to pay Anthropic anymore because these tokens cost too much money. So they pretty much are like, they bailed out. They're like, yo, you're charging way too much for how much tokens we're using for your AI. So we're not going to use your service anymore. So then you'll start seeing all this weird tokenization of every little bit and piece of business transaction you do. So she's already like alluding to the fact that we're going to start thinking in those terms instead of like I pay you per query, or I pay you per dollar for a query. It's not going to happen anymore. Or I pay you per month. No, we are basically going to count your tokens. All right, this is the new economy. So the tokenomics, all this stuff came from crypto. All this crap came from crypto. They just repurposed it over here. So I think you're going to see more and more of the ideas and concepts that came from cryptocurrencies be applied more into AI. And that's why it's not a surprise that all these companies like Hut, Iren, Corzi, that used to be Bitcoin mining companies now turn into AI infrastructure companies. So Michael Saylor, he jumped into Bitcoin way too late. Everybody was jumping out of crypto and going to AI while he was hyping up Bitcoin. It was the end of Bitcoin. The Bitcoin was the kind of like incentivization for people to build more of this hardware infrastructure ahead of time. So it's kind of like it planted the seeds for AI before the AI stuff started in 2021, late 20. Yes. So yeah, more. It's too late. All this, everybody started going into subscriptions. I mean, once I saw iTunes, I knew it was over. iTunes was the beginning of the end. iTunes was, you rented the music. It was like DRM. Everything was like you had to play it through the app. I was like, dude, if people start doing that, they get used to the idea that they don't own anything. They rented stuff. So this is the dream. This was a dream of Oracle. Oracle was saying, like, remember I played that video from Larry Ellison? He hated the PC. He was like, I hate the PC. I hate the PC. I want everyone to just get it from the cloud. Get it from the cloud. This was before anyone had the conception of a cloud. He didn't call it a cloud before, but that was the genesis of the cloud. Once you had people have Google Drive, have iTunes, it got people going that way. Cryptocurrency, same thing. They got people to think like, money is digital, right? Money was already digital, yeah, but now you abstract it to the form where like everything is so digitized that you don't even conceptualize thing in the physical world anymore. So the more you do this, the more you get people in the mindset to accept AI, having a stupid little Chromebook, connecting to the Google Drive. Google owns your data, right? If you said a naughty word on YouTube and you got your whole YouTube channel shut down and you tied your YouTube channel to a Google Drive, that's gone. All your shit's gone. That's right. They own everything. You own nothing. So that stuff doesn't surprise me. Like it was already going that way. They were training you to accept it. So that's why there's no pushback right now. You don't see people rioting, right? You acclimated to the reality of an AI world already over these last 20 years. So, yeah. So, there you go. That's why this stuff is like that's why Sam Altman can say what he says. So, here, let me show you this and then we can continue on to the next thing, video, I guess. I think we're just gonna continue on. So, okay, I got your PNF chart here. Okay, so I think this is correct, right? So if you take this first half move here, this first portion, you get to the intermediate move here, right? So that's why you see we're struggling as we got closer to this 114. So this is probably correct. Somewhere around here. We just get here and we're going to zigzag, right? Fight. And then we're going to build a new range over here. Now, if you take this 36 and extend it out to the full rectangle all the way to the end right here, to the May push up, you're probably going to find that's the next level. So if you count this next range on top between 80 and 100 when we complete this, and I bet if you do this count here, you can confirm that those two counts match, then that's extra. That's an extra confirmation that the next level above 114 will be where we're going to be. So if we count this full range, this full square here, rectangle here, and then we count the next range on top, it should match and line up. So that's what Bruce always does. He always takes like an intermediate range and then later he just extends it out and goes like, well, I got a new range building up. If I count this new range here and I count the full range at the bottom and they sync up to a new target above, then that'll be the next target. So whatever that is, I don't know. So I'll probably should do the PNF on this one. But first we have to see if we even complete this thing here. Like, I don't even know if this thing is ready to move up or not. We could still be stuck here into June. And then by July, we're going to have a problem. And then we just go back down again. So So there's no rush, I don't think. But yeah, definitely look at air. Air is something I'm very curious to see how it goes next year. All right, so we're going to go back and look at Micron again. You see people complaining on Twitter. Can someone explain to me why a $1 trillion company is literally trading like a meme coin? Well, look at the options market. Okay, boy, look at the options market. So I'm going to play a video that will explain this better, but that video that I downloaded. So we're going to go back to that one. This is a different kind of VIX. This is the VIX equal weight. So they don't count the index, okay? Because if I just did the VIX, the volatility, the implied volatility index of the SPX or the Nasdaq, so S&P 500 or the Nasdaq 100, it's market weight, right? So Nvidia is dominating it. Micron is dominating it. So if I compute the VIX from that, I don't see what's really going on. Because you remember the nerd who was talking last week and then again this week, he was saying VIX go up and stock market goes up. That's weird. If I just use the normal VIX, I don't see that. The VIX is going down and the stock market is going up, which is what it should do. But what we're seeing now is like the VIX is going up. So it's kind of like dancing around here and it's going towards that cyan line. The VIX is going up and the stock market is going up. So it's going up together. And that's what he was saying. Like, that's not normal. Something's wrong. We're in a different regime. So if you listen to that nerd, you understood what's going on, then this guy's question can be answered. It's because the options market has turned everything into a meme coin. It's not just Micron, all right? So, yeah. Anyway. All right, here's another funny one. Imagine if Warren Buffett used all that cash to buy Micron and SanDisk or AMD or Intel anytime in the last 12 months. Just imagine. No, he just bought T-bills. He basically is in cash. All right. All right. So everybody's laughing at Warren Buffett right now. Very easy to laugh at him, right? You get everyone to laugh. See, that's the last time we had a lot of people laugh at Warren Buffett. When was that? .com bubble. So this is good. The more you see people laugh at Warren Buffett, that means, yes, we are about to get a big bubble and you should trade it and make a lot of money before it crashes. So can you do that? That's your goal. All right, Korea. Some brokerages halted margin loans. That's what I mentioned earlier. And the mandatory leverage ETF education site literally crashed from too much traffic. So the Koreans have to go to school before they buy leverage ETFs. So you guys, if your brokerage accounts allow you, you just buy like HUTG, SOXL, GDXU, and they don't even warn you or like say that's dangerous. They just let you do it. Well, the Koreans apparently have to go to school before they can use leverage ETFs. So, number one, Korea has introduced more options. So now they have single stock options that expire every week. Now, so they added that. Now they also have a bunch of boomers, I'm guessing, that cashed out of their life insurance to play the casino, and they're learning how to use margin, and they're using leverage ETFs. And I'm guessing later on they'll learn how to use options. Great! This means more gamblers. The Korean market can go to 10,000. All right, let's go. All right, let's look at the DRAM prices here. So this little tweet was interesting. So this guy predicts that DRAM prices will peak in 2027. There were a lot of people that were complaining that DRAM prices were already going down. And today that GPU prices for rentals, so people that rent time on GPUs in NVIDIA, have been also starting to go down. So kind of a lot of little things that are popping up that people are saying like, maybe we already hit the top. Well, we'll see. We'll see. So something to worry about, I guess. This is Micron this morning. We got up nearly to $1,000. So yeah, my $1,000 target might be hit. this Friday if we don't crash and burn tomorrow after the inflation. So watch out. We were $985 an hour, pretty much an hour or like a half an hour or whatever before the market opened. So there you go. All right, so leverage ETFs in Korea has surged. Flows into leverage SK Hynix ETFs in Hong Kong have surged. So that's why China blocked them on Friday. They said, hey, yo, anybody from mainland China who has a Hong Kong account from a brokerage there that's using it to buy foreign stocks and bonds or whatever, shut it down. So unless you are a Hong Kong citizen, you are blocked. So only special Hong Kong citizens can get that. If you're a mainlander in China, sorry, you are now blocked. So I guess they saw this and they said, nope, we don't want these Chinese to be stuck in a Hong Kong bubble market. So sorry, get out. So leverage trading in Asia is more popular than ever. The 2x leverage SK Hynix ETF listed in Hong Kong has attracted $1.3 billion in year-to-date inflows. As a result, total ETF assets under management AUM are up to $8 billion, the highest on record, making it the world's largest single stock leverage ETF by assets. Oh my God. That is crazy. That is crazy. Yeah, Fidelity gives you a warning. Some brokerages will block you, so we'll see. So anyway, yeah, wait for the morning. So if you got pre-market and you see like a huge crash in semiconductors, watch it. That might be a great place to start looking for an entry for the next bubble. Or if it really crashes hard in the morning, pray to God that the money is going into HUT, APLD, Rocket Lab. Like I told you, that money better be going somewhere else, and it better not be going into like cash. And people are scared now. I don't want that. Don't get too scared now. This fund's AUM has more than tripled over the last 3 months. Furthermore, the 2x leverage Samsung ETF has attracted $1.3 billion of inflow in 2026. This exceeds the year-to-date inflows of comparable 2x leverage ETFs, including Tesla. Tesla sucks. Microsoft stock sucks. Those two stocks have sucked this year. Now, SK Hynix and Samsung are the two largest South Korean stocks together, accounting for nearly 50% of the Kospi. Yeah. The Korean market is essentially just SK Hynix and Samsung, which has a total market cap of $4.5 trillion. Asian retail investors are rushing into leveraged chip stock bets like never before. So watch Korea. I'm thinking Korea will pop these coming months. So if it doesn't pop this week, it might pop next month. And if it doesn't pop next month, probably will pop like July. Okay. And once that pops, enjoy the ride back down. Okay. So that should all these semiconductor stocks just really roll over, and then it will just spill over and crash everybody else in August. So by the time we get to August, everything will crash. Okay, both SK Hynix and Micron, with this morning's 6% squeeze, are now worth more than Berkshire Hathaway. Another tweet to laugh at fucking Buffett right there. Yeah, why are you so dumb, Warren? Why didn't you just leverage and buy a bunch of Micron, SK Hynix, SanDisk, Samsung, right? Why are you buying T-bills? Why are you in cash? You could have just leveraged and bought Micron and SK Hynix this year and just quadrupled your money easily. See? Well, there's risk, right? Obviously, it's fun when it always goes up, but eventually it's going to blow up. So there you go. I don't know. It didn't last time we dipped. People ran from everything. I don't know, man. It's all options anyway. Who the hell knows? Like options are just machine run. They're not really real people. Yeah. So here's what 78 trillion and at 401ks, automatic buys on Friday, stuff like that. People don't actually, directly do anything. It's really all mechanical. It's either your W-2 paycheck, you get like what? How much percentage do you contribute to your 401k? How much you set with your company, and then the company does a match. So if you're in a really nice company, they'll match your 401k contributions. And guess what? That money will go into Micron, Nvidia, right? So shit. It's all mechanical, man. The system is designed to go up that way. There's no actual people actually actively managing their money, okay? Very few people actually actively manage their money, right? Most people are just passive investors. They don't go around looking at charts or looking at the options market or doing anything. No. What they do is they go on CNBC and start screaming and yelling at the TV. That's the most they'll do. They'll just be like, fucking Trump. Why did he go to war with Iran? My stocks are going down. And then all of a sudden, stocks are going up. They don't talk about Trump no more. They're like, oh shit, hell yeah. Go Israel. My stocks are going crazy right now. Micron is like going up 50%. Hell yeah. You see? They're like dogs. They just bark, but they don't bite. Are you guys gonna threaten to blow up a data center and get on a list? Nope, you're not. You're comfortable. You're just gonna sit in front of your screen and yell at the sky. Anyhow, okay, here's what a $78 trillion in U.S. equity really means. If we add up the next 9 largest stock markets on Earth, the U.S. is still $20 trillion bigger. The U.S. market added nearly $7 trillion in value in 2025 alone, roughly the size of the entire UK and French markets combined. Americans are 4% of the world's population, but make up nearly 50% of the world's stock market. So, this is why you are lucky to be a U.S. citizen. You have access to the best casino in the world. So, you should take advantage of it. If you want to get rich, you can, if you know what to do. And I'm trying to tell you what to do because this is your last chance before the biggest fall ever by 2029. Whatever happens in 2029, I don't know what it's going to be, but it's going to be big. It's either going to be like war with Taiwan. We're going to have like basically a hot war over there, and it's just really going to destroy everything. I don't know. Or maybe the inflation is going to get so bad, the AI will have to put everybody in UBI, and we're all just going to be serfs for the technocracy. I don't know. Maybe that's what it is. Because Anthropic CEO said this. He said, the signature of AI is it's going to take us to a world where we have very high GDP growth and potentially also very high unemployment and inequality. Okay, so Sam Altman, the CEO of OpenAI, and now the Anthropic CEO have both said this, that we're going to have high unemployment, high inequality, but we're going to have very good GDP. Now, do you care about the GDP, really? You know, you're going to have high immigration, high unemployment, high inequality. You can't take a shower because the data center next to you is taking all the water. Your electricity bill is now like quadrupling because they're sucking down all the electricity too. Does that matter to the common man at the bottom? No, it doesn't. It definitely doesn't. Okay. We are now in a K-shaped economy. Okay. Do you guys know what a K-shaped economy is? I don't think I have time to read this. I don't think I have time. Let me see. How much time do I got? Okay, maybe I do have a little bit of time. Maybe I'll read this anyway. Okay, so I'll read this article here. K-shaped economy. A little bit of it. And I also have this nice little chart. I might as well show this to you too. So I'm going to show this chart. The top 10% of U.S. earners account for nearly half of all consumer spending. Okay. So the stock market right now, you see Lululemon going down, you see Nike going down, you see a lot of these stocks going down like Home Depot. these consumer discretionary stocks, but nobody cares anymore. Okay, GDP is still going to go up because the rich are still going to buy. They're still going to have cruises. All right, they're going to be in the Royal Caribbean. You can suffer in the Carnival cruise. They'll be in the Caribbean cruise. All right, so we are going to have a bifurcated world here between two peoples. You have the bottoms, you have the tops. You a bottom or you a top? Tell me where you want to be. So this is the future. This is just going to keep going up. This is going to keep going down. That's what's going to happen. And and by the time you go lower and lower, you're going to have to get UBI. Otherwise, people are just going to revolt, I guess. I don't know. But as long as you get weed and porn, I guess you'll be happy. So you'll be fine. So that's it. So this is called a K-shaped economy. Okay, so because it's going to look like a K. Okay, that's why they call it a K-shape. The K-shaped economy's defining statistic has some problems. All right. Okay. Let's see here. Bottom 80%. Okay, we're going down. Top 10% of income distribution. Okay, going up. Okay, so these guys are making money on the stock market and real estate and bond market and whatever, and their businesses, they're going up. All right, and everybody else is going down. Your $20 per hour fast food job in California still makes you a brokey. $20 an hour is a brokey in California. You might as well just be on welfare at that point. $20 doesn't get you anywhere. $20, I could go to a store right now and spend $20 and get a potato chip. $20 gets you in California. All right. So the defining statistic of the so-called K-shaped economy is a little hard to define. According to Moody's Analytics, the top 10% of Americans by income were responsible for 45.8% of consumer spending last year. Before a change in methodology to reflect the impact of taxes, this figure was estimated at 49.2% as of mid-2025, leading to the oft-repeated claim that nearly half of consumer spending was being driven by the top 10%. Put their revised spending and that of the bottom 80% in a chart together, and you can still see something like a K emerging over the past couple years. The rise of high-income spenders, share of U.S. consumer spending, four-quarter moving average, top 10% of the income distribution in blue, bottom 80% in black. This sort of looks like a K, right? This seems to offer striking evidence of rising economic inequality and also of the potential fragility of the current expansion, given that they show the top 10% spending share rising and falling with asset prices. These statistics are also implausible, as skeptics will point out on social media every time the nearly 50% claim is shared. They often cite an X.com thread by economist Antoine Levy of the University of California of Berkeley's Haas School of Business. Haas School of Business is San Francisco and downtown. Supposedly, it's one of the elite law schools out here. I don't know if it's true or not. In which he explained that while those in the top 10% of the U.S. income distribution probably account for about 50% of pre-tax income, they face higher income tax rates than those with lower incomes, with most estimates putting their share of disposable income after taxes and transfer payments in a range of 30 to 37%. Yeah, I got taxed that rate when I was working here. That's another reason I retired too, because when you count state taxes and federal taxes, and then you have capital gains tax in California, it eats away everything. So if I actually wanted to move up in the corporate ladder and I say like, okay, my 200K becomes like 300K, 400K. I that still would suck. Okay, 300, 400K means nothing when you get taxed so high. The amount of work that I get to do, right? The amount of responsibilities I get if I become like a manager and become like maybe a director level, manager to director level, or maybe even vice president if I was lucky. If I sucked enough dick and got into a vice president position. Okay, but that's a lot of work. I'd rather be a engineer and just stay down there. That's not worth it because I have to pay 30 to 37% in terms of taxes, right? And not including like Medicare, Medicaid's, Social Security, blah blah blah. I mean, after 300K, can you even contribute to Social Security anymore? I think you after a certain level, you're like, nah, you can't even contribute. So pointless. Uh, anyway, their share of spending must be lower than that because people with higher incomes tend to have higher savings rate. The main official source of data on the distribution of consumer spending, the Bureau of Labor Statistics Annual Consumer Expenditure Survey, reports that consumer units like households, but not exactly, in the top 10% of the pre-tax income distribution accounted for 22.9% of spending in 2024, down from 23.5% in 2014. That's as far as back as the BLS breaks out numbers for the top 10%. But for the top 20%, one can compare the two series back to 1989. They tell a very different story. They tell very different stories, two very different views of spending inequality. The top 20% of income distributions share of U.S. consumer spending. So I guess in blue, and then in black is the BLS. The blue is Moody's Analytics. Okay, all right. So what does that mean? Does this mean the Moody's Analytics consumer spending numbers are wrong? Well, they almost certainly aren't right, but the same goes for the BLS numbers. Especially suspect is a nearly unchanging share of consumer spending that the BLS attributes to the top 20% over the past 35 years. I feel more confident in the historical trajectory than I do in the actual levels, said Mark Zandi, chief economist at Moody's Analytics and keeper of the spreadsheet that its quarterly consumer spending estimates. I wouldn't die on the hill of the top 10% accounting for 45% of the spending, but I would fight hard that the share that's going to folks in the top 10%, top 20% has risen significantly and consistently uses to estimate consumer spending combines data on asset holdings by income from the Federal Reserve's triennial survey of consumer finances with data on asset flows from its quarterly financial accounts of the United States. The idea to merge the two originally came from then Fed Chairman Alan Greenspan. Who did we talk about yesterday? Alan Greenspan in the late 1990s. My understanding is he actually sketched it out on a napkin on an airplane flight, said economist Dean Mackey, who, along with his Fed colleague Michael Palumbo, was charged with making Greenspan's idea operational and using it in 2001 to estimate the wealth effect on consumer spending during the 1990 stock market boom. Ho, 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 ho. All right. I don't know where I left off here. But let me see. So I think I left okay. Airplane flight. My understanding is he actually sketched it out in a napkin on an airplane flight. And economist Dean Mackey, along with his Fed colleague Michael Palumbo, was charged with making Greenspan's idea operational and using it in 2001 to estimate the wealth effect on consumer spending during the 1990s stock market boom. One thing I learned from doing that research back when I was at the Fed was that wealth effects are important, said Mackey, now chief economist at asset manager Point 72. They are an important driver of consumer spending, and they still are today. All right. Since 2019, the Fed has published distributional financial accounts that use this approach to estimate quarterly changes in wealth by income group and other demographic characteristics. Zandi has made his own tweaks to calculate spending estimates, and Mackey said he didn't know enough about them to comment. But Benjamin of the Federal Reserve Bank of Dallas recently used Zandi's methodology with adjustments for taxes that Moody's Analytics subsequently adopted to estimate that Americans in the top 20% of the income distribution had accounted for 56.5% of consumer spending so far in the 2020s, close to the 57.2% average in Zandi's data and far above the 38.3% reported by the BLS. It is telling that Hoham and Yang chose to report averages over several years and not quarterly statistics. The Fed's quarterly numbers are volatile and subject to revision. And while Moody's Analytics smooths them out a bit by using moving 4-quarter averages, these may still represent more noise than signal over the short term. You probably shouldn't be using them to track consumer spending. The statistics from the BLS showing almost no change through the decades in high-income household shares of spending also have their problems, though. One is that Consumer Expenditure Survey misses out on a lot of actual consumer expenditures, with respondents apparently having an especially hard time remembering gambling losses and spending on media subscriptions and alcoholic beverages. Oh, these guys don't want to remember all the money they threw away on YouTube Premium and cans of beer. All right, so that's why we can't use these data. Oh, man. Okay, anyhow, I could go on and on and on and on here. I mean, you can read it yourself. The link is in the description. All right, but I think overall, it's really hard to figure out what's true or not with all the data, right? So this data is from Moody's Analytics. This tweet today, someone just gave this tweet. And so I had to dig around, right? I had to dig around and go find this article and then go like, well, that data might not be reliable, but the trend is there. So I guess if you believe the trend, we're going to go that way. But I don't know if the number's true. But we'll see. We'll see if it is true, then the economy is going to be fine. Everybody else is going to be poor, but as long as the rich people still spend money, the economy is okay. I guess that's the thing you're going to get from it. But with this article, it's like, hold on. That might not be true, because if that number is way off from what we think it is, then we could still have a recession. So put that in the back of your mind. There's a lot of things coming down the pipe, right? AI will save us, maybe, right, from inflation. Then the other thing too is like rich people will keep spending. Okay, put that in the back of your mind too. Is that true or not? The stock market will keep going up and people will still get rich. All right, well, put that in the back of your mind as well. So eventually all these things will have a problem, right? And then we have all these companies like Oracle, Microsoft, Google, Amazon. They're all spending a ton of money, getting a lot of bonds to buy more equipment, expand their data centers, do capital spending. All this stuff might end, right? If the customers don't show up, if people don't buy their tokens, right? They're going to be like, well, if you're going to use Gemini, you're going to need like 10 tokens or whatever. And then like, if you're going to buy 10 tokens, that converts to like $200 a month. Are you going to buy that AI subscription? If you're not, if these rich people aren't going to do it, the poor people aren't going to do it, if the government even says like, hell no, we're not going to spend that much on these services, then what's going to happen? The bubble pops. So I think you want to put all this potentially bad stuff that will come down the line into your head. But what's coming in front of us in the near term is that market is going to go up and we got to make money as fast as we can before this bubble really pops. Then, ChatGPT charges But the thing is, they don't charge with the token stuff, right? Anthropic right now charges with the tokens. So the token system changes how you get charged. So ChatGPT or Grok, I pay a flat fee. I could pay like $20 a month and I get my features. But Anthropic, they charge based on how much tokens I consume. So remember the NVIDIA article, based on how complicated my question is, I get charged differently. So if I ask like the Claude Anthropic, I ask like, yo, how many cocks did this person suck? And then Anthropic goes like, well, I don't know this person. I don't know how many cocks they sucked. And that's it. And then they charge me 1 token, right? That's an easy question, right? But then if I ask them something complex, it's like, hey, can you solve this, like these partial differential equations of this gamma curve from this micron options that expires on like July 2027, and it spends like 10 minutes to compute and it charged me 10 tokens. So based on how many tokens I use over the month, they give me a bill, and the bill is like $1,000 or something because I keep asking these hard questions. Then I'm like, I'm not going to use this service anymore. You see, it's like a utility, just like Sam Altman was saying. Now you get it. Now you get the difference. It's no longer a flat fee that changes when, you know, like Elon Musk decides, well, I think we're going to change how we charge you to, next month because of this and that. So he decides it. But when we do tokens, now it's more like per user. Every user will get a different bill, right? Just like a utility. So the tokens will give you that flexibility to charge people differently. So that's what they're aiming for. That's where we're headed towards. All right. Anyway, other news is that like Meta, Facebook is now charging for services now. So if you're using Instagram Pro or whatever, they're gonna charge you a fee now. I don't know. So yeah, there you go. Yeah, H2 Water. Yeah. They're gonna compute everything and they're gonna turn them all into tokens. So how much compute resources you use in that GPU over that hour, that's gonna be a token. Anyhow, I need to figure out which stocks to buy way more shares of than I've been predicting with, or else I'll just stay small stacks when the bubble pops. Yeah, you're gonna have to get more aggressive. That's right. So you're gonna have to practice now, and then you're gonna start going higher and higher, and you know, that's it. And if you use options and you do it right, guess what? You can probably turn $10,000 into a couple million if you make the right plays, you know, over time. Yeah. So that's why this next market is going to be crazy. You really got to do it right. You really got to do it. You got to do leverage. You get a loan, get a margin account. I don't know, whatever it takes to get leverage. One way to get leverage is options, right? That's one way. The other way is to get a margin account, increase that. Another way is to get a HELOC, right? Just take a loan out of your house. So if any of you guys own a house, take a loan off of it, take that money, dump it into the market. I'm dead serious. I'm freaking dead serious. If you got a debt max now. So yeah, take a screenshot of this. I guess this is the final chart of this article. But I'm not going to read anymore here. All right. So how much time we got left? Okay, a little more time. So I went through that. I think we're done with this. Let's finally get to the video that I wanted to get while I was downloading, and we probably could wrap it up from there. All right. Okay. Oh, actually, I have another video after that. So if we get this done, I could play a little bit of an old video. An old video. All right. Yeah. Yeah, buy money with money. What could go wrong? Follow the Koreans, man. Come on, just do it. the heck? The audio doesn't work again? Man, I just tested this right now and it just still doesn't work. No way. So there's something wrong with the codec. Oh, so there must be some kind of the restream can't play it. There's something wrong with its codec that it can't play it or something. That can't be right. That can't be true. There's no way that's like that. Really? How could you have something that has no... Come on. We live in 2026. Why would a codec issue have a problem right now? That can't be the case. I cannot believe that. Really? Wow. So I can play it on my end. It can't go to the restream end. Really? Okay. So I'm gonna just play this then, and we'll get back to that sometime later. It's not that important. It's not that important. But we'll have to get back to that for sure. That's definitely something we have to get back to. So I'll have to fix that on my end somehow. In any case, let's play this. Okay. All right. Here's an old one, but a good one.
This man is Jean-Baptiste Pierre-Antoine de Monnet Chevalier de Lamarck. In 1809, 50 years before Darwin published The Origin of the Species, he wrote what is widely recognized as the first comprehensive theory of evolution. His book, De Philosophie Zoologique, introduced the notion of an internal code within every living thing, which, when passed down through successive generations, defined the physiological characteristics of a species. At the center of Lamarck's theory laid what he called the adaptive force. He believed that the experiences of an organism during its life modified this internal code, and upon reproduction, this modified version was passed down to its young. Whilst not biologically accurate, and ultimately superseded by Darwin's theory of natural selection, the epigenetic theories put forward by him are beginning to find new homes in unexpected places. When we use contemporary technology, a trail of information is created in the form of data. When analysed, it describes our actions, decisions, preferences, movement, and relationships. This codified version of who we are becomes ever more complex, developing, changing, and deforming based on our actions. In this regard, this ledger of our data may be considered a Lamarckian epigenome, a constantly evolving representation of who we are. This is Bill Hamilton, one of the most significant evolutionary theorists of the 20th century. His work studying the social structures of ants and wasps had a profound effect on our understanding of the role of genes in social behaviors such as altruism. He believed, and went on to prove, that the driving force behind evolution was not the individual, but the gene. He stated that the ultimate criterion which determines whether a gene will spread is not whether the behavior is to the benefit of the behavior, but whether it is to the benefit of the gene. In the mid-1970s, the British evolutionary biologist Richard Dawkins built on the work of Hamilton and others to popularise the concept of the selfish gene. In his book of the same name, he introduced the notion of a gene which, whilst devoid of any motives or will, could be metaphorically and pedagogically described as if it were. In this model, the individual organism is a transient carrier, a survival machine for the gene. User-centered design principles have dominated the world of computing for many decades, but what if we looked at things a little differently? What if the ledger could be given a volition or purpose, rather than simply acting as an historical reference? What if we focused on creating a richer ledger, by introducing more sources of information? What if we thought of ourselves not as the owners of this information, but as custodians, transient carriers, or caretakers? Initially, the notion of a goal-oriented ledger may be user-driven. As an organization, Google would be responsible for offering suitable targets for a user's ledger. Whilst the notion of a global good is problematic, topics would likely focus on health or environmental impact to reflect Google's values as an organization. Once the user selects a volition for their ledger, every interaction may be compared to a series of parallel options. If one of these options allows the ledger to move closer to its goal, it will be offered up to the user. Over time, by selecting these options, the user's behavior may be modified and the ledger moves closer to its target. As this line of thinking accelerates and the notion of a goal-driven ledger becomes more palatable, suggestions may be converted not by the user, but by the ledger itself. In this case, the ledger is missing a key data source, which it requires in order to better understand this user. In order to plug the gap in its knowledge, the ledger begins searching for a device which delivers the required data when used. From this list, the ledger begins sorting the options most likely to appeal to the user in question. In situations where no suitable product is found, the ledger may investigate a bespoke solution. By analyzing historical data, it is increasingly possible to discern qualitative information such as taste and aesthetic sensibility, which may be used in the creation of a design proposal. With the advent of technologies such as CNC milling and the emergent possibilities of 3D printing, a custom object may be created to trigger this user's interest. In this way, the ledger is able to plug gaps in its knowledge and refine its model of human behavior. User data has the capability to survive beyond the limits of our biological selves, in much the same way as genetic code is released and propagated in nature. By considering this data through a Lamarckian lens, the codified experiences within the ledger become an accumulation of behavioral knowledge throughout the life of an individual. By thinking of user data as multi-generational, it becomes possible for emerging users to benefit from the preceding generation's behaviors and decisions. As new users enter an ecosystem, they begin to create their own trail of data. By comparing this emergent ledger with the mass of historical user data, it becomes possible to make increasingly accurate predictions about decisions and future behaviors. As cycles of collection and comparison extend, it may be possible to develop a species-level understanding of complex issues such as depression, health, and poverty. Our ability to interpret user data, combined with the exponential growth in sensor-enabled objects, will result in an increasingly detailed account of who we are as people. As these streams of information are brought together, the effect is multiplied. New patterns become apparent and new predictions become possible. Since the 1970s, huge efforts have been made in sequencing the human genome. Today, after many years of research and billions of data points, that sequence is known. By adopting a similar perspective with user data, we may begin to better understand its role. Just as the examination of protein structures paved the way to genetic sequencing, the mass, multi-generational examination of actions and results could introduce a model of behavioral sequencing. As gene sequencing yields a comprehensive map of human biology, researchers are increasingly able to target parts of the sequence and modify them in order to achieve a desired result. As patterns begin to emerge in the behavioral sequences, they too may be targeted. The ledger could be given a focus, shifting it from a system which not only tracks our behavior, but offers direction towards a desired result. We are at the very beginning of our journey of understanding in the field of user data. By applying our knowledge of epigenetics, inheritance, and memetics to this field, we may be able to make mental leaps in our understanding, which could offer benefits to this generation to future generations and the species as a whole.
All right, so that was an internal Google video that got leaked about maybe over 10 years ago. And this was before all this AI stuff, right? So this kind of conceptualization was, taken from cryptocurrencies, right? The cryptocurrency concepts of the ledger and the unending, kind of I guess book, you would say, a book of data that keeps streaming through forever and ever and ever and ever. Every transaction will be kept in that ledger. And so here they want to take that to the point where they could have data from everybody, right? All across the human race. And guess what? We are going to have AI now, probably. So Google already has this, right? They already have an idea of what you want. That's why they have ads. The ads can target you. They already have that. Also, there are people that believe that like the microphones are always on. So that information gets piped into Google. If you use an Android, I guess. If you use an iPhone, it goes to Apple. And now they have a whole bunch of things, models of humans, right? They know what black people like. They know what Asians like. They know what white people like. They have all that stuff to that level and detail. They know what you consume. So all that data stuff we were discussing earlier about like, oh yeah, how much do the rich people actually consume? What's the upper 20%? Google already knows everything. So you don't even ask the Federal Reserve or all these other people. They don't know crap. If you really want the data, go to Google, go to Apple, go to all these big tech companies. They have it already. They know what you're doing. They already collated it. And, the credit card companies already have it as well. They all share data with each other. So they probably have a huge model of everyone across the earth. And now all they need to do is hook that up to the AI and tell the AI, yo, what's the best way to make this guy do what we wanted, what he or she, it, whatever, what they want to do. And that's it. It's done. You're toast. We really are going to enter a new world, especially with the token stuff. So you got the ledger, you got the token. I think you have all the pieces from cryptocurrency that they've already used and tested and expanded. And now they're turning it against, at weaponizing it, I guess you can call it that. And we'll see from there. I don't know, right? I really don't know how the future is going to be, but it's going to be wild, very wild. So anyhow, let's see if this other video is going to be. But I think you guys know the game book, the script, the plan. This is where we want to be. Yeah, keep my phone covered. I loved it when they have like that Mark Zuckerberg interview, and then Mark Zuckerberg had tape all over his laptop, like all over the camera, the mic, everything. Yeah, I always put like tape everywhere, and people always laughed and said like, "Why you do that?" I'm like, "Are you serious? Man, you guys are walking around. You guys are morons. Whatever." All right, so let's see if I can play this video yet. Holy shit, man. Come on. Does it work? Does it work? Why doesn't audio work on this restream? Come on. Please work.
Good afternoon, ladies and gentlemen.
Yes. So what I have to do is I have to download from YouTube, right? And then depending on how the codecs are encoded, I pipe it in through StreamYard or Restream, and they'll play the video. So I don't need to share my screen. If I share my screen, like OBS or using StreamYards or Restream, it takes more resources. This way is cheaper. I basically just pipe the data directly through the Restream or or StreamYards, and their data centers will play it for you. So they run, they run their local version of whatever they use. I don't know what they use to play the video back, right? I hope it's not like Windows Media Player or something. It could be, but they play it and then you see it right back. So I don't actually have to play it on my computer and then screen share crap. You get what I'm saying? So that's why it supposedly takes less, local processing. But apparently that video I just downloaded, didn't play the audio, which is bizarre. Like audio codecs are simpler than video. So why would it should be, I don't know how it was encoded, but apparently the restream didn't play it. The audio was mute. I think this is the first time I've ever seen this kind of problem happen. Very strange. Very strange. So there you go. Technology is so complex now. I don't know where the problem would be, But anyways, playing now. So anyhow.
Are here on May 26th. It is a Tuesday, coming back from Memorial Day weekend and kicking this week off in markets with quite the bang. Technology leading the way. We're going to dive into what's going on in these markets and go over some of these expected moves and really what happened last time that we saw this type of dispersion taking place in the markets. Tech did lead the way today, and that was heavily influenced by some news over the weekend. Micron was a big leader. Let's go ahead and get into today's stock market report. All right, ladies and gentlemen, welcome back to the show. I'm going to start off here looking at this chart. This chart is highlighting the SP 100. Those are the 100 largest names in the S&P 500. And the reason why I'm pointing this out is because the markets were up pretty hefty today, especially the NASDAQ 100. But when you look at the S&P 100's advanced decline line, what do you see here? You're seeing 64 declining names and only 36 of those are advancing. So the breadth was rather weak, but some of the larger names were holding this market together. And it was very risk-on type day today. We did have tech leading the way, and then towards the bottom, energy and consumer staples.
So this was Tuesday, okay? This was not today. That's what he's talking about. But you can see everybody's been complaining about this. Very few stocks are going up. A lot more stocks have been going down, but the S&P still goes up, okay? So that's what it means. So the breadth. So let's fast forward. All right, let's go here.
Correlation here, the core 3M.
All right.
Moving higher. It's really just here for a pop-up higher, and maybe perhaps we can lead to this to another pop-up higher. Now, if we take a look at this chart, things are getting rather interesting. I'm looking at the dispersion index and then also core 3M. So
the dispersion index basically says the same thing. It's like very few stocks are going up. Okay, so that when this blue cyan line is moving up, that means less and less stocks are moving up and pushing the market up. And then the little pink at the bottom, magenta, fuchsia, I don't know, whatever. It's showing the correlation. So we have less correlation, I guess, between maybe equal weight. Maybe that's what it is. Stock market. Like the broad stock market, not the S&P 500, like the NASDAQ composite, the NYSE, the New York Stock Exchange total index. So the total stock market, not the best of the best. So if these things are like going differently, then like, whoa. So only Micron is going up and then everybody else is going down kind of market. Yeah, that's bad.
Dispersion and then correlation. And if I'm looking at the dispersion index moving higher, it's really just telling us it's more of a stock picker's tape. And what we're seeing here as it's going higher, we're seeing the VIX volatility index spread to constituent volatility, more of like an equal weight volatility widen. And I'll show you those charts momentarily, but then we also have the implied correlation here, the core 3M, at lows that we really haven't seen for quite some time. And if we just take DSPX and divide it into the core 3M, what I'm showing here is a reading at 3.75, which is a level that we haven't really seen in quite some time. And we're going to dive into what happened in the market during that time. And really what it's telling us right now is that it's a stock picker's tape, right? Few names are really driving this product. And this is the thing that we've been talking about for the last week or so. Now, the dispersion index got a reading of, I believe it was right around 40.29. And as you can see, these red candles on the SPX, there's a few of them that I'm highlighting here. Those are any time that dating back here just about a year, anytime that the dispersion index got a reading above that 40.29. And as you can see here, typically when you get these higher readings, it marks areas of consolidation and pullback. The more recent time we talked about it was right here, and we pulled back for a few days before heading higher. The time before that, we just pulled in a couple of days before heading higher. And we're still seeing, very few names, right? The stock pickers tape drive this overall market higher. Now, the last time that we really got a reading on this ratio was back here in July going into August. And during that time, what was happening? Well, you were seeing a big run up in the S&P 500 right into and around here before going through about.
Okay, do you remember what happened then? That was the yen carry trade. That was when the yen was getting so weak and the Bank of Japan had to step in and stop it. And when that happened, the people that were using Japanese currency to the weak currency basically to get cheap loans, okay, because the interest rates back then in the Japanese bond market was very low. They used that to convert it to a better currency, like a Mexican currency probably. And Mexican currency would then like have bonds with higher interest rates. So they would get a loan in Japanese yen, convert it to peso, get the peso, and then buy Mexican bonds, get the interest, use that interest to pay for US stocks. So when that got disrupted, people had to sell their Nvidia, sell their whatever tech stocks, get out, go back to the peso, okay, and then convert that back to yen, blah, blah, blah. So that's what's been happening that time. Now, if you listen to Samantha LeDuc, she says like that doesn't happen anymore because now they've been hiding out in gold, and so people have been using gold. The Japanese have been using gold or whatever, and then now it's just like it's all confused. So that's probably why the gold has been messed up too. Like shit, everything's so confusing. It's like people are trying to go around and try to get loans, cheap loans to buy U.S. stocks, right? And that's been the game. Everybody's been going around trying to do this game where they just try get money to buy more stocks, try to figure out a way to get the cheapest loan they can, to borrow as much money as they can, to gamble more in the US or now Korean. So now we got Korea in this thing too. So now people want to buy Korean stocks. You see the problem? This creates a bubble, right? So we had kind of like a mini bubble here in 2024 during the summer. So
a 10% correction in the markets. Now, this is where it gets interesting, is because how do you prepare and how do you time for that? And I think that's what these last couple of videos have really been kind of honing in on, and that has to do with our gamma flip line. So if we just go back to this time, which was 2024, so a couple of years ago, when we started to see this ratio rise like this, and you go back over here, it'd be kind of hard to time it because the market kept going higher and then all of a sudden it broke. So what was that factor that really told us to say, hey, pump the brakes here, things could get crazy, right? Because we didn't know that this was going to happen. Well, if you go back over to here, this is the VIX, right? I'm using the VIX. You can look at VIX futures. I'm just using this, and I'm highlighting it with this gray box. And this gray box starts right here on this specific day. I'm going to show you what that day is momentarily. And what that day is highlighting is the very first day in a while that we slipped under the gamma flip line. And the gamma flip line, I'm talking about the S&P 500 gamma flip line. And what that tells us is that volatility can increase, liquidity can dry up. And the main point of being aware of it is because it can lead to the potential of higher volatility. And as you can see, we got this warning shot on this day. So when was that? Well, we started to see, right, dispersion really increase. We had core 3M, at depressed levels. And then all of a sudden, right over here on this specific day, it was like 717, I believe it was, we started to cross under the gamma flip line. And then if you were aware of that, you could have known to start protecting yourself for a potential larger move down in the S&P 500. The reason I once again want to reiterate this is because the S&P 500 has been heading higher. We're starting to see the spread between the dispersion in the core 3M obviously reached to levels that we haven't seen in quite some time. So when things, break, or if we break under the gamma flip line, not all the gamma flip lines are going to be similar to one another, not all times that we fall under it. And when we start to see these things stack up, that just makes it that much more important to know where that gamma flip line is on a daily basis, especially if you are an active trader. Now, if we go back to that time on the SPX and we look at July going into August where we saw that sell side, where did we sell off into, right? The market was pressing higher and higher. It actually came right into the lower quarterly expected move in very fast fashion, and that ended up being a great buying opportunity. During that same time, if we look at the total put to call ratio, that was back right over here, and you could see that the line started moving up sharply above 1.0, that's the 10-day moving average. And when you get up into that area, it could typically mark out decent back through as it did over here in this area too, where we saw some geopolitical risks that led us to a little bit of a sell-off this year. And then when we're below this 0.8, it's typically where you want to be a little bit more careful, which is also why we're saying it's just that much more important to be paying attention to this gamma flip line. And that's just...
All right, so we can come back to this sometime down the line, but remember, we are in a dangerous spot where this bubble could pop. All right, so that's all I wanted you guys to know. And then we were discussing that VIX thing earlier with like the equal weight. Yeah, we'll talk about that again because he mentions that here too. So, oh man, get ready. So we gotta watch the Korean markets though. That thing looks, if they're being blocked from getting loans to buy their pumping their markets, I don't know. It's gonna be bad. It's gonna be bad. So watch the Korean markets first. That might be the reason we pop in the coming months. Okay. If we survive this week and next week, then next month watch the Korean markets. Okay, as we get into SpaceX, IPO, and all that stuff. So this is probably when something breaks in Korea, then everyone breaks. So I don't know. Hopefully it just breaks semiconductors, but there's no guarantee of that. There's no guarantee of that. So there you go. All right, guys. I'll see you tomorrow. We're gonna have like the inflation numbers in the morning. Okay, 1 hour before 8:30 Eastern. That's right. So watch that. If that thing crashes semiconductors, let's see. And then after that, we'll go from there. So maybe I'll show up like an hour after the market opens if everything goes wild and goes like like Depop or just a